Having a mentor and a guide along the way is really instrumental. So what I want to do in this webinar, it's going to be one of a whole series of webinars. So I'm not going to download a whole bunch of information to everybody today because one, that's not practical. You're not going to be able to digest all that information in one session. But I want this to be kind of a cumulative learning process, not only understanding what prop trading is all about, the advantages of doing it, but also the right approach when taking on that challenge. And I know there might be some people on here that either haven't taken the challenge or maybe they're in the midst of it. Either way, what I'm going to talk about today is going to be relevant because I'm basically going to lay out kind of the foundational aspects of what anybody in the trading industry needs to know about. And yes, it might be true that I do have a more of a short-term nature in terms of my trading duration, as well as with some swing trading. The principles I talk about are basically time agnostic, meaning it doesn't matter if you're a longer-term investor, swing trader, or active day trader, the principles pretty much apply. And we're going to be, over the course of these next several webinars, we're going to be touching upon a lot of them. We're going to be touching upon, position sizing, going to be touching upon how do you define your entry? How do you define your stop loss? How do you define your profit target? Those are all, concepts that you have to be familiar with, but we're going to build up to those. And it's really instrumental that you understand the basics first and then build upon that. That being said, I want to really encourage you to throw questions into the chat room as we're going along here today, because I want to make sure that what I'm talking about is resonating with you. And if you have a question, please ask it. There's no silly questions. We've all been in a position where we're kind of the new person and we're always usually afraid to ask, but I want to assure you that there are no dumb questions. There aren't any. Not asking the question is the dumb approach, for lack of a better way to put it. So please feel free to put your questions in there. It will help me guide what I'm talking about, and it might even help me catch a few things that maybe I just glossed over too quickly for you. So let's take it back just a little bit. Prop trading. For those of you that don't know what prop trading is, I actually came up in the prop trading space in a slightly different structure than the way it's being presented here at the Trading Pit. But way back early in my career, this would have been 1995, give or take, I had the ability to trade stocks on behalf of a prop firm. I had to put up a small amount of money as a deposit against my potential losses. But then I get the benefit of using the firm's capital, the firm's buying power, to make trades in the market, trade at a professional level. And that's the key thing. There's nothing wrong with a lot of the trading platforms that are out there nowadays. Most of the brokerage firms have gone to great lengths and great expense to provide pretty darn solid tools. However, these are not the same type of tools that you're going to see on professional trading desks. They still fall one step shy. It's, if you're a carpenter, let's say, it's kind of like showing up at the job site with a set of tools that's designed for your 12-year-old son. You're going to be able to get the job done, but you're not going to be as effective, and you're not going to get it done in a way that is conducive to a professional outcome. So by entering into the realm of prop trading, you're not only getting better tools, you're also getting access to capital, which is huge because it takes that burden off of you of losing your capital while you're kind of going through the ropes and learning, but nonetheless, you still want to make some money. So one of the reasons I started to work with the Trading Pit is that there are a lot of firms out there nowadays doing it. Their approach is very different. And I'll allow people like Alex or the folks at the Trading Pit to kind of speak to that, but they have a much different approach. It's a little bit more on a case-by-case basis as opposed to just blanket rules. And that's really how trading is anyways. If you go and try to get a job, let's say at a hedge fund or at a bank, and you want to be a trader on their desk, yeah, there's some guidelines, but they're looking at what your abilities are as opposed to did you hit these hard numbers, and if you didn't, you're automatically out. Because anybody, a manager of a trading desk is going to say, you know what, maybe that guy didn't make 20 grand last month, but damn, his trades were consistent. He had low drawdowns. He had winners greater than losers on average. This is a guy or a gal that we want to get behind and work with. And it's the same for any profession. You know, having arbitrary benchmarks is good, but you have to look under the hood at some point and go, you know what, this person's actually got some talent. We can kind of harness it and back it. That's going to benefit them as well as us in the long run. And that's the benefit I had when I was prop trading as well. It was in their interest for me to succeed. What could they do? They could provide people on the desk to say, hey, he's the new guy on the desk. Give him a little encouragement, share some ideas with him. And that's part of the reason we're doing this webinar. I'm kind of here, you know, kind of think of me as the guide for your journey from prop trading, let's say step one, all the way through prop trading, passing the challenge, and then continuing your journey beyond that. Because I can tell you that the minute you go from quote unquote, not real money to trading real money, where you're actually going to get paid out based on your trading results, that's a big shift mentally, and you have to be prepared for it. I know specifically what happened when my prop account was funded. I went from a period of waiting for my account to be funded for a couple of weeks, because that was back before we had instantaneous transfer of money. I had to gather the money and get it all together. I kind of paper traded, and I was doing really well. And I was thinking at the time, like, wow, I got this thing nailed. I'm going to kill it. The minute I went to live trading, I froze. It's like, oh, all the chips are on the line now. Whatever I do, good or bad, falls on me. You know, if you're doing a demo account and you lose money, it's kind of, okay, whatever, no harm, no foul, so to speak. So I want to kind of put myself in a position as someone who's been doing this a really long time to take you from that square one to the passing of the challenge stage and then beyond. Love to be able to create a group of people where we're going down that journey all together. I still learn things every day from people that are in my circle, and you can benefit from that as well. And I can benefit from you when you get past those stages. What did you do? Oh, that's interesting. I hadn't thought of it doing it that way. So that's why we're here today, to talk about the benefits of prop trading, but more importantly, kind of set some expectations about what's it going to take to really be a trader, whether you end up being a longer term trader or a day trader or somewhere in between. You've got to have some foundational principles in place. So I don't know if anybody wants to shoot me a couple questions right out of the gate here based on what I've said. If not, I will continue to move on with the conversation. So I don't see any right now. Alex, if you see any pop in while I'm talking, just let me know, because I don't have the ability to have one eye there and one eye over there. So
of course, don't worry. You focus on the webinar. If there are any questions, I'll pass them over to you.
all right, I am going to pull up oh, Rick Testa. Yeah, it's one of my clients, actually. Rick's got a question. I don't know if, did he not pop up? I don't see that. At any rate. Do you see Rick's question by chance, Alex?
No, actually,
I
I
saw something.
don't.
It said Rick raised his hand, but I don't see anything in here that allows me to see what that is. And I know, Rick, I got two participants who've raised their hands. Maybe you guys could just type it into the chat box, your question, since we seem to be unaware of how to look at the hand raises.
Yes, Rick and Haruna. Actually, if you don't mind typing in your question in the chat box.
While they're doing that, I'm gonna share my screen with you folks, and I'm gonna go over my basic philosophy on markets here. So give me a moment here. I'm going to share my screen. Alex, if you see my screen, just let me know. You should be able to.
Yes.
All right, perfect. And then I'm going to bring over my drawing tools here. Okay. Doesn't matter what the instrument is. This happens to be the S&P 500 futures on a daily chart. And that's not really what I want to focus on right now anyways. What I want to focus on is some core principles. For most traders, whether they have very little experience or even a fair amount of experience, the one hurdle that I see people run into, and I ran into it myself, is that we come to the market with views and opinions of where we think prices are going, whether it be the stock of Tesla, whether it be the value of the euro, whether it be S&P futures, whether it be whatever the instrument. That can be helpful, I suppose, maybe if you're a longer term investor, but I would even argue that maybe there's an element of false confidence in doing that. At the end of the day, we can't always know where prices are going to go next. And by having an opinion about where you think prices are going, that might be okay, but it also may not hold a lot of weight, because what you're doing by having that opinion is you're saying that you've got the market direction right and the rest of the market doesn't see it that way at that point in time. Now, there is a possibility that you're right, but there's also a strong possibility that you're not right. So that's what I would call subjective views on the market. And, the classic thing that a lot of people use, they use trend lines. They'll come in and they'll draw a trend line across a bunch of highs and lows. And they'll say, well, if prices break above here, that's bullish. If prices break below here, that's bearish. Now, sometimes that will work. Sometimes that won't. It's going to depend on two things. One, that the rest of the market at large is even considering what you're looking at. Maybe they're not. Does everybody have trend lines drawn on their charts, especially the big institutions? I don't know. Maybe, maybe not. That's a big leap of faith to take. Number two, just because it breaks above this level, is that really a catalyst to drive prices higher or lower? Maybe. But again, unless everybody's looking at that particular setup, that may or may not happen. My point in all this is that our opinion and how we analyze the market has to be consistent with what the market's looking to do anyways, or where the market is trading at that point in time. Then if your opinion coincides with that, then you may have a valid trade setup. So let me ask you a question. I'm going to answer Rick's question as well as Spiros's question here, but I want you to think about this, and I really encourage you to answer this question. What is it that drives market prices up or down? What specifically allows for prices to move from point A to point B, whether it be up or down? Think about that for a moment. I'm going to look at these questions from Rick and Steve and a few others here. I lost Rick's question, or maybe it got answered already. Oh, there his was. Got it. Chat box. Okay. Spiros has a great question. It dovetails in hopefully with what I've been kind of talking about and where I'm getting to in this webinar. His question is specifically, what would you advise your first started self, which means, me as a beginner, rather than finding out the hard way in terms of trading? So the way I understand that question is, if I could go back in time to when I was in 1995, when I was in my 20s and I started trading, what would I do differently now? Really simple. There's a couple things, and I think this is a great question because it dovetails in with what we're trying to do here, which is to create a journey. Let me be real frank, and this might be a little bit too blunt for a lot of people to hear. trading is not something you learn in a weekend seminar. It's not something you learn by reading a book. It's something you learn over time, like any profession. There's probably a lot of people on here who are very successful in their current profession, be it firefighter, attorney, maybe they're a doctor, maybe they're a painter, carpenter. How long did it take you to get really good at it? And the answer is, oh, it took me a long time, Dave. I did 5 years of framing houses before I really got good at it. Oh, you really? But yet you want to be a trader in 1 month. Doesn't work that way. That said, if I could go back and do one thing differently, it would be this. It would be making sure that I had a methodology that worked, whether it be someone else's methodology that I was utilizing until I found my own way, or making sure that that methodology was sound. Because the problem we all run into is that if we don't believe in what we're about to do, i.e. placing the trade, our mental confidence is really low, and it's not going to give you the ability to execute at the right time, and it's not going to give you the ability to execute on your way out. So there's a disconnect. Your brain knows this. Your brain knows that, like, I don't really know why I'm placing this trade. I don't have a lot of confidence. And as a result, you go into that trade with very little confidence. And as a result, you have a hard time managing that trade. The minute it starts to go against you, you're immediately panicking, going, I don't know why I'm in this anyways. Now it's going against me. It could get worse. So what I would suggest doing is, unless somehow you're the one person who happens to know how to trade on day one, even though you've never done it before, the best thing to do is to kind of work with someone else who has a methodology that works and is consistent with who you are as a person. That's the key thing as well. You don't want to be doing something that's not fitting to your temperament. Not everybody wants to trade futures. Not everybody wants to short-term trade. Not everybody wants to long-term trade. But we're getting a little ahead of ourselves. What I think I can provide for you is the following, and it segues into my second question there. What is it that drives prices up or down? Because in my view, it's not a trend line, although that will happen from time to time. It's not an oversold oscillator, in this case, a stochastic, although that will happen from time to time. Bingo, Nadine has it. The answer to the question is, she states it as liquidity, meaning more liquidity, less liquidity. That's true. I'm looking for a little bit more on that. In my estimation, and I believe this to be true, the market is always leaving footprints of what it's done, or order flow, volume, frequency of trades. So for instance, if I draw a line in right here at, let's just call that 4,700 for ease of conversation here. That would be a line, and you'll know why I drew this line in here in just a moment. This would be a line where a few things happened historically. Over a predefined period of time, lots of trades took place there. Doesn't matter if they were buys or sells. A lot of trades took place there. There was a high frequency of trades, not just one or two big trades, but lots of trades, big and small. And you're measuring them over periods of time. So think about that. If that is where the market collectively did a lot of trades at 4,700, and it did it over the course of, let's say, 3 days. This took place over 3 days. So 4,700, we had a lot of trade. The price action just kept going back and forth over 4,700 or at 4,700. You can be reasonably sure the next time, and let's say prices have pulled back and they're kind of doing this, and then they come back to the 4,700. You know that level is going to be an inflection point. We don't know if prices are going to hold it or if prices are going to break above it. But now you have one key piece of information that other people who aren't approaching the market this way don't have. You have an area that has a high probability of a reaction. It might be up or it might be down. And that takes us to step 2, which we'll get to. But now at least you know there's a potential trade. So now the question then becomes, well, now what? We'll get to that. It's our job as traders then to identify where those levels are. Now, what I've done, and this is just showing you my methodology and how I incorporate it into my charts. I have these levels drawn automatically onto my charts by my charting platform. It takes all the data that I talked about, volume, frequency of trades, time frame that you're looking back to determine, where those levels are, because those are going to tell me where price action is likely to have those potential inflection points. So I can just have those on my chart, and when prices get up to them, then I'm at the ready to make a trade. And the way I draw these in, I'm just going to change my color here a little bit. Again, I'm just going to make these up. I'm not saying these are the right levels. I'll put the right levels on in just a moment. But let's go down to, let's say, an 15-minute chart. And if this is, hopefully this is clear to everybody. I want to make sure everybody's following along here. Let's just say, for the sake of argument, that when you came in this morning, these levels were drawn here. I always draw the levels in in a band. There's an upper level and a lower level. So you can think of it as resistance and support. So let's say you didn't have the benefit. In fact, let's make this even easier, an easier example. Whoops. Easier example to do. I'm going to go back and pretend that this is the market open. We don't know where prices are going, but what we do know is this. We do know that these levels have been drawn on our charts. And they've been there for a few days. So we come into the opening. And this is how price action unfolded. Prices dipped below it. They held the support level, came back up, fell back down, went back up, and then eventually broke through, tried to get back above, and then moved straight down. Now, I know that's a lot of price action going on there, but those levels helped you identify where there was potential support and potential resistance. Now, I know phase 2 of that is, okay, well, when do I make that trade? That's something that we will get to in subsequent webinars. It's not something that can be all thrown at you today. You guys will walk out of here with your head spinning, and that's not the point. The point is to get you to take away some basic building blocks to incorporate into your trading that you're doing now. If you're currently in a challenge, fantastic. Think about these concepts. So the first and foremost is that the only time I'm looking to make a trade, and this is starting off at the very basic level, is when prices interact with one of these levels. And these levels aren't subjective. It's not where I think they should be drawn in. It's where the market's telling me this is where a lot of prices, a lot of volume and price action took place. Therefore, market prices will react to that. Let me give you a great example. This is actually came from a client of mine. See if I can bring this up real quick. Give me a moment. Bring that up. Oh, here it is. Here it is. I got it over on the screen. Yep, there it is. Blow it up a little bit. Here's a chart that one of my clients sent me last week. And unsolicited, he just was like, holy crap, this is great. He bought Google. These levels were all drawn on his chart. He bought Google on this breakout above this orange level at 107 and rode it all the way up to the next highest level at 126 over the course of, this is a daily chart, over the course of about 7-10 days. That's a pretty, not only good trade, but a pretty straightforward way to look at trading the market. Now, maybe you didn't get right in here when it breaks above, but the minute that prices start to accelerate away from that level that was containing price action, and again, keep in mind, these levels were known in advance. This is no after the fact stuff. We knew once we broke above here that we're probably going to go up to the 115 level. Looks as though it's about 115. Let me blow this up just a little bit here. And then all the way up to 127, which is where he got out of his trade. That's a pretty easy process to follow, at least in terms of the very basic building blocks of it. And that's why we use these levels, because they give us permission to make trades based on relevant real-time data. Just want to go and show everybody following along as to what we're getting at here. Now, I know the next obvious question is, okay, you know, that's great, but you know, how do we avoid ourselves getting suckered into you know, buying a breakout, having it fail? Well, that goes to stage 2, which is your trading tactics. First, you have to identify where you would like to get long or short. Then you have to identify, okay, are the market conditions right at the present time for prices to move above or below that level and continue in that direction? That's phase 2. That takes a little bit more time to get used to, and we will definitely walk through some of those big building blocks in the sessions to come, and I'll even touch upon them here today in some live examples so that you can walk away from here going, okay, this is what we looked at, this is what potentially could happen, and then track that over the next several hours, several days, and see how that worked out for you. So that being said, let me close this Google chart. First of all, does anybody have any questions on this Google chart from our client? Okay, nobody seems to have any questions. I guess I'm making myself really quite clear. I'm going to close that down and get rid of these drawings. Let me ask a question just to kind of keep things going here. How many people on this call have a prop trading account currently? And then how many people are in the exploratory stages? Why don't you let me know that? Because I'm real curious as to who I'm speaking to. And feel free to type in any other questions in there as well that you might have. Nadine's got a question here. Where do the levels come from? Well, as I said, well, actually, are you saying how are they calculated or how do you get them? Oh, hey, Brad. Brad trades an actual live account. He's also a client of mine. Nadine said, where do levels come from? Are they a composite, or, you know, what exactly are they? Well, let me go through and kind of review them again. It's something that I came up with a few years ago. I wanted to make the transition from being more subjectively based. I used to do a lot of Elliott wave analysis, and it served me pretty well. I'm not going to complain. It's kept me going through the years. But the thing that I continued to struggle with in terms of the Elliott wave analysis was that oftentimes I'd see a setup that I thought was good. And keep in mind, Elliott wave is a rules-based analysis approach. But again, like anything, it can be subject to, you know, interpretation a little bit. But more importantly, it goes back to one of the things I said initially. Unless the rest of the marketplace is looking at that identical setup from an Elliott wave perspective, there's no guarantee, not that there ever is, but there's no assurance that that particular setup is going to play out. We hope that it does, and oftentimes it does, because there's other factors you put into your trade making decision. But again, I started to really think about that. I'm like, you know what? Even if this is a wave 4 pullback and it's holding Fibonacci support at the 50% level, so what? Who's to say that it won't go lower? Or who's Are we all back?
Yes. It looks like we had an internet connection. Glad to see you're back, Dave. Apologies, everyone. It looks like we have an internet connection. Those things, they're happening on live broadcasts. Let's give a second.
Lots of good questions here we'll get to once we get everybody back online here. You see my screen, Alex? Yeah, it looks as though you can.
Yes, yes,
All right, I think we're back on live here.
yes. I think we are.
So we're going to get to all these questions. They're all really good questions. So I think we got cut off, whatever happened, is I'll just start at the beginning. Nadine's question, I think it was Nadine. Yeah, Nadine's question was, how are these levels calculated? And I think I was giving some background on my previous analysis process, Elliott wave, and I wanted something that was more objective as opposed to subjective. So I started looking at the 4 types of time frames that any trader is going to look at in the marketplace. They're going to look at short time frames. Maybe they're an intraday trader, short-term trader, swing trading, medium-term trading, and then longer-term trading. So I wanted a series of price levels that gave me context, not only context, but also areas where trades are likely to take place. Again, nothing subjective about it. I'm just doing calculation. I'm having the software do the calculations. It's available on TradingView. It's available on MotiveWave, and it'll be available on MT4 at some point. And we do have something available to you folks at the end. We'll talk about if you want to get them on your TradingView or MotiveWave platform. So these are automatically drawn in. I'm going to show you those in just a moment. So they're automatically drawn in on 4 time frames. They're color coded. Green being the shortest look back period, orange, red, and then purple. So it might look a little confusing at first, but those are the 4 time frames that I'm looking at. And those time frames are dynamic. they're always adjusting based on volatility and price range. I don't want to use static time frames because markets aren't static. I want them to adapt to what the market is doing, or let's say not doing. So I want my look back periods to be dynamic, and they are, but they're all within windows of shorter term, medium term, medium to long, and then long term. So hopefully that addresses that question. So right now, this chart does not have any of those levels drawn on it. So let's go to a daily chart, because they're all based on daily calculations. In fact, I might even bring this chart over. This is going to be the best one to do it on. Let me bring this chart over. Give me a moment here. Yeah, this will be the best chart to do it with. Okay. Here's an intraday chart, because the question we had was, how does this help me on an intraday basis? These are the levels. They're drawn in on my charts automatically. And these are the levels that, as you can see, they've been drawn back in time. These are not after the fact. These levels have been here. So we knew that when prices broke below 41.72 here, that was clearly an inflection point. Just like this 41.20 level has been a real stickler today. Prices have dipped below it. They haven't been able to get below it. So we have an opportunity there, even though I'm not a big fan of trying to buy bottoms. Every once in a while, it makes sense. 41.11 is a huge level because it's orange. It's one time frame higher, green being the lower time frame. Doesn't make it less relevant. It just means that it's taking in less data, but it's relevant to a shorter term trader, relevant to a swing trader for sure. So the question then was, well, how does this help me on a day trading basis? I'll give you a great example. I'm going to bring this down to a 5-minute chart, and I'm going to give you an exact way to use this information going forward. An advanced trader may have been able to catch some of these spikes higher. I wouldn't expect a newer trader to do that. But what I would expect a newer trader to look for is this, and this happens to be right where we are right now. I'm looking at this market knowing that 41.20 is a big level. We can't seem to stay below it. That tells me something. That's clue number one. Objective price level, market not staying below it, and staying above the other objective price level at 41.11. That's key information. That's just observation. That's not my opinion. That's an observation. Now, if I am not long the S&Ps right now, and I'm using this as a very simplified example, but it does make sense and it's legitimate. If prices start to retrace a little bit right here and hold, that's pretty bullish. If they came all the way back to 41.20 and held and then turned higher, that's even more bullish. So what do you do with this information? I'm bullish the S&Ps right now. Will I chase this entry? No, I will not. I will never chase an entry. But what I will do, and this could be a stock, it could be Tesla, it could be anything. These levels work on any instrument that you want to look at. And again, I'm just trying to keep it very simple. These levels, up until here, there's really no trading opportunities today. There was a trading opportunity here, and not there. That's an errant drawing in there. So what I want to look for then is for prices to start to pull back to any degree, and certainly if they pull back to 41.20, I want to be a buyer. And then if prices dip below 41.20, maybe a point, 2 points, whatever your comfort level is, that's where you have to get out, because the market's telling you we don't want to hold above there. So I think that answers the question that I think it was Nadine. No, it wasn't Nadine. It was, yeah. I think I pronounced their name properly. Sheikh Pancham. You know, I understand what you're saying conceptually, but how do these levels relate to intraday trading? Hopefully what I just shared with you there made that pretty clear. That's what I would be looking for. Some traders, myself included, who maybe have more market experience, you know, maybe the fact that push back through it, maybe I would have already been long. But that's more of an advanced trading concept. We can't get all of that under our belts in one session, 1 month, 1 year. That takes time. But the basic approach is what I just laid out. Market's told you what it wants to do. Doesn't want to stay below 4120. It's tried to all day, has not happened. Now, if it pulls back and holds, meaning that a lot of sellers don't show back up, that tells us more information. So does that make sense, Shake? So I would say that everybody in here, if you trade S&Ps, or even if you trade SPY, or if you trade the CFD equivalent of the S&P futures, there's a long opportunity here for sure. It could even be a longer term one because we've had a pretty robust sell-off, and this 4120 level is pretty big on a longer term basis as well, but that's independent of this conversation. So hopefully that makes sense, and hopefully that drives the point home. Okay, great. I'm so glad to hear that, Shake. Andrew has a question here, and it's true. Prices never fully respect your levels. That's true. Nothing in the markets are absolute. You're always going to get to price levels in the market, and there's going to be a street fight. You know, bulls and bears, they're going to fight it out. This is a great example of it, Andrew. This isn't not clear, but what is clear to me is that we traveled all this way down, all the way from 4,200 plus earlier in the week, all the way down to this pretty key level. And yet prices didn't continue to move south. All they've done is gone back and forth. That indicates to me enough of interest of not pushing prices any lower to keep an eye on this level. So yeah, that level didn't work. And I didn't say that as a beginner, anybody should have been a blind buyer into this level once it held. You have to use trading tactics. And that comes with experience. I can't give you the answer as to, oh, you just buy it when it hits the level and it magically works. That will never happen. And if anybody's telling you that, please walk the other way, because you'll fail your challenge, because the markets don't work like that. This is what I would consider the most obvious trade setup we've had since 4120's come into play today. So Andrew, my answer to your question is that levels are never perfectly respected. At times they are. And what you have to do in the meantime is wait for that market to tell you, yeah, we like this level. We're not going below it. And that's what I'm hearing from the market right now. So will I start buying this pullback towards 4126, 4125? Yeah, maybe. That's trading tactics. That's for, a webinar 2 or 3 or 4 sessions down from here. All I'm trying to do initially is give you what most new traders want. What constitutes a good trade? How do I know what trade to look for? Because most people are going, oh, it's oversold, the moving average is crossed. Those are generic methodologies that will not work in the long run. They will not work for you. As a newer trader, you need something that's objective and easy to follow. To me, lines on my chart are pretty easy to follow. Oh, prices are interacting with that line. Might be a trade opportunity here. Prices are in between the two lines. This is just as important. There's not a trading opportunity here unless you're in more of an advanced trader. That concept right there will save you hundreds, thousands of dollars knowing when to trade, and more importantly, knowing when not to trade. So I now know I have a trading opportunity here over the next hour, 2 hours. We got about 2 hours left in the session. Of course, futures trade 24 hours a day, or 23 hours a day. But at least we know now, and maybe by the time we're off this call, this will have resolved itself and prices will have pulled back a little bit, stalled, and then moved higher. I don't know what's going to happen. We never do. We can only, it's kind of like playing poker. We know we've got a good hand. We don't know what everybody else has for a hand, but we have to base our decision based on what we have. Is it good enough? Okay, take the trade. Keep your stop loss tight. And if you follow that methodology over time, you will come out ahead. You're never going to know everything for certain. You can't. So you just have to put the odds in your favor, place the trade, have good money management skills, and then move from there. So is this pretty clear to everybody? This is probably about as far as I'm going to take it on session number 1. Because again, I just want you folks to walk away with an idea and a concept of what constitutes a trade, what constitutes not trading. That's very, very key. All right. One thing I would say, Andrew, to kind of go further on your question, maybe trade smaller lot sizes. Give yourself some wiggle room. Giving yourself 1 or 2 points on the S&Ps, that's too tight. That just happens by them being open. They wiggle like this all day long. So if you're not comfortable trading, let's say 1 or 2 mini lots, which is $50 a point, you got 2 of them on, it's $100 a point. Most people don't want to take that kind of heat. Trade a micro lot, $5 a point. Let that thing breathe. The only way you're going to get really good at this is you got to have live money on the table. Now, granted, your demo account for your test phase is live money because you're being judged on that. So if you have not set up your prop account yet, yes, it's quote unquote fake money for the duration of the challenge, but it's real money because you're being judged on that. You don't have the luxury of saying, well, if that trade doesn't work out, so what? Well, no, it does matter. You're now that one step further from completing and passing the challenge. So my takeaway for everybody on this call today is what I just laid out. What constitutes a trade? What doesn't constitute a trade? Which is based purely on objectively derived price levels. For those of you that are considering taking a challenge, why not try it? We have a voucher that I'll pop into the chat box in just a moment. The Trading Pit is doing a 20% discount on the challenge you chose or on the challenge that you decide to choose. I'm going to take it up a step further. And of course, then we'll round out with any last minute questions. If you go to my website, which is kind of my affiliate link with the Trading Pit, you can go to aspentrading.com/the Trading Pit. Here you can get rid of the drawings here. You can start your challenge, put in the promo code, or if you're not ready to do anything just yet, sign up for my free newsletter. My newsletter is very, what I consider unique. I'm basically chronicling my journeys, not each day, but once or twice a week, a few times a month, on what it's like actually trading professionally and actually managing money. The winners and the losers. I'm giving you my perspective as I sit here every day and saying, hey, this is what happened today. This is what I could have done better. That's a great learning tool through you. Click on newsletter. It's free. You'll get added to the list. But if you are looking to start your challenge, I'm going to sweeten the pie. I'm going to get a 20% discount. I'll share those codes in just a moment. But you're also going to get access to my services, and kind of indirectly, you're going to get access to me. You're going to get access to my morning futures and FX report, where I'm talking about the levels and trade scenarios I'm looking for in the day ahead. You're going to get access to those Aspen trading levels that I've been showing you on the charts for TradingView or MotiveWave. I should say MotiveWave in here for those of you that might use that, but certainly TradingView is probably the most popular platform out there. And I think probably the most important thing, you're going to get access to the Discord room where I'm in there as well as my clients, and we're talking about the markets in real time, what we're looking at in terms of the levels. Other people are posting ideas on stocks, but all based on the same methodology. Nobody's in there talking about Fibonacci's, talking about Elliott waves, or everybody's talking about it. How are we trading the market based on the Aspen trading levels? That keeps everybody focused on one methodology that we know works, and it keeps the conversation very clear. If somebody starts talking about some other methodology, I promptly say, hey, no, not here. Go do that somewhere else, because all that's doing is muddying the water. What we want our clients to be doing is focusing on what we know works and getting better at it and sharing their ideas, sharing their observations. That chart from Google was a perfect example. When I got that chart from our client, I was like, you can't ask for much more than that. So that being said, you can go to aspentrading.com, the Trading Pit, the-trading-pit. Click on Start Your Challenge. If you do sign up for the executive or VIP level challenge, you'll get access to these at no cost whatsoever. Alex, I'm going to type in into the chat box here the promo codes that you and I talked about, unless you have them handy. It's up to you. Give me a moment here. There they are. So the promo here, I'll just put them in here. Oh, you put it in as an image. Okay, it's 20% off. I'm going to put it in here in just a moment.
I'm adding it as well. I did add it on the chat.
Perfect. The promotion ends on May 31st. It starts today, ends on May 31st. So you can get 20% off with the promo code Aspen Trading Group. Click on Start Your Challenge right here. You can choose any of the challenges. There's 4 available, whether it be for Forex or futures. But if you choose the VIP ones, you get my extra bonuses included, which I think is a sweet deal, because the bottom line is anybody, myself included, could give you a bunch of tools and say, okay, off you go figure out trading. That's okay. It's like taking a manual on how to do brain surgery home and going, okay, I understand that. Now go do the surgery. 2 completely different things. Once you're in live markets, your perspective changes and suddenly everything you forgot about, it's kind of like Mike Tyson's famous line, everybody has a game plan until they get punched in the face. And it's the same thing with trading. You come in with your game plan. Okay, Dave said, if we do this, that, the other thing, okay, all of a sudden market goes the other way. You're like, oh crap, now what do I do? That's where the Discord room and some of the things we talk about in the reports, as well as having the levels, give you the ability to adjust, adapt to live market conditions, because the theory and the logic, which is up here in your head, only goes so far. Then you've got to apply it in real-time markets. And that's where having a guide along the way is really, really useful. So strongly encourage you to sign up for the challenges, get access to our products as well. The combination of those 2 things, professional trading tools, as well as access to what we have going on and access to me indirectly, huge leg up relative to what you're going to get from most prop trading firms and just most quote unquote educational providers in and of themselves. So I'll leave it at that. We'll keep an eye on the S&Ps. They continue to just kind of grind a little bit higher here. So I like what we're seeing here, kind of playing out to what I thought could happen. If we have any last minute questions, I'm more than happy to take those. I love questions because it really lets me know what we're talking about here. We will not be talking, Steve, we're not going to be talking about money management today. Again, that's more of an advanced not advanced, it's a very important concept, don't get me wrong. But to throw that into the mix today, we're not there yet. You know, we'll start talking about those concepts in the webinars to come. And it's not that I'm purposely dragging that out. I'm laying these out incrementally because that's part of the learning process. We got to do step 1 before we can go to step 2. But here's what I will tell you, Steve. And I'm not saying this as a way to like create an incredible amount of anticipation around the webinar on money management, whether that be webinar 3 or 4, wherever it slots in. It is money management and position sizing are the most important aspect of your trading. Your methodology could be spot on, but if you don't know how to manage risk and size your trades, it does not matter. And when we get into that, your eyes are going to go open. You're going to like, holy crap, I never thought of it that way. It's so important that your money management and position sizing is dialed in, and it's mathematically dialed in that leaves no room for error. So we will tackle that, Steve, but not going to get to that today. The SR levels do not work on TradeStation. Again, these levels are based on client demand. We have most of our demand for TradingView and MotiveWave. MT4 is becoming a popular platform. We'll probably have that one. Not that MT4 is not popular. We're getting a lot more demand for our levels on MT4. So we probably will have that in the not too distant future. I'm hoping maybe within about a month. But in the meantime, you can do them on TradingView and or MotiveWave. So that's how I would answer that particular question, Sheikh. And I think at that point, Alex, I think we've gone through all the questions, I believe. And for those of you that aren't yet prop trading, okay, got it. But again, I'm hoping that I've inspired some confidence in everybody today to show you that it doesn't have to be a big, scary, ambiguous process. And the key thing is you don't need to learn on your own, nor should you. Again, I'll use the brain surgery example. It's like you trying to teach yourself brain surgery without the advantage of having someone who's been doing it for 20 years showing you the ropes. Trading's a weird industry. People think that since they're successful in other industries, they're automatically going to be successful at trading. I would argue that trading is probably one of the hardest professions in the world, because it's usually a game that's won up here in your mind, not necessarily in terms of what you know. So if you're still thinking about doing the prop trading and you're saying, well, I'm just going to keep trading my account over here doing what I think is going to work, that's okay. Probably going to be a really long journey for you, because unless you're making money right now, it's going to be really hard to stumble across that without some outside guidance. That was the same for me. I couldn't have done it alone. I was in an office with other guys. I had to start interacting with those people and finding out what's working, what's not working, and then incorporating that. That's the only way you'll learn. And as I always tell people, they're like, well, I don't know if I'm going to get your levels. I trade with, I don't know, time cycles or whatever it is. And I'll be like, okay, great. Are you profitable? Well, no, but I'm going to, okay, well, I run money based on my levels. I have a profitable track record. I've been doing this for a long time. Our clients get the benefit of them. So my simple question to you is, if you know something is valid and is working, why not just tag along, enjoying the ride? It doesn't matter how many people are doing it. Everybody can benefit from it. So I'll leave it at that. Alex, is there anything you want to wrap up with? We got the promo codes out. I think we got through the bulk of what I wanted to do, and we'll leave it open for next time, which will start to get into more of the trading tactics. Okay, we've identified the levels. Now, how do we move on to the trading tactics?
That was great, Dave. I would really like to thank you from my side. That was an amazing webinar. I had the opportunity and get to know Dave in the United States, but now I'm understanding the ability that he's having in order to pass the knowledge over. It's not easy to pass those skills and that knowledge over, right? And this is a great ability that you have. I couldn't agree more what you said in the end about the tools, because regardless what kind of tools we do provide, if those tools that are going to be used correctly, right, and trust the procedure, then again, the result might not be the one that we actually expect. So basically, the trading pit with the partners, we're here to provide the tools. We're looking for people with the talent to bring the talent in the table. So together, all together, we can shape and we can form a great team. Just in case for anyone, if you do have problems logging in or any technicalities, I'm leaving my email on the chat, so you can send me an email at any time and I can come back to you with an answer. And you, Dave, thank you very much for your time. That was great. That was right on the point, and I'm really looking forward for the next time.
Thank you very much, Alex, and thanks everybody for attending. Thanks for the questions. I greatly appreciate it. And I really encourage you. Oh, the next one will be on June 7th. Is that correct?
Yes, yes.
June 7th, same time.
7th, yes. Well, we're going to start sending emails. We're going to start advertising the webinar on the social media. And of course, guys, stay tuned with the Trading Pit and with Aspen Trading Group for more information and for more surprises in the future.
Have a good day, everybody.